Hello everyone. So today's video is based on PD arrays. Many of we new ICT traders struggle to understand what this means. Like I said, I always give a shout out to my coach. He's on YouTube here, Solomon King. He did a wonderful job on me trying to make me understand everything about ICT in a more simpler way, and I'm sharing the knowledge with you guys to understand it also. Please try to stay to the end of this video to gain more value and understand how to do a top-down analysis using the PD array. Now, we're going to start with a 1 week chart, a 1 month chart, sorry, a 1 month chart. Using a 1 month chart, we're going to use GBP USD. Now, this is a 1 month chart, and we can see it is a bearish momentum. But what's happening here? Market is doing what we call a retracement. Am I correct? Now, if I use my Fibonacci from the high to the low, signaling here as my premium and here as my discount. So I should be looking for buy in 1 week in the discount area and sell in 1 week in the premium area. Now these are zones that markets are going to react in. Example, we start picking all the zone area that we expect markets to come to and make a form of reaction. We have an order block, right? We have an order block here. So I want to mark it well. We have a swing low here there's a swing low here. So market shifted structure here. I'll categorize this, I don't know if I'll categorize as a breaker because there was a break of structure here, but there was also a shift in market structure here. So we have no breaker around, but some people will actually pick here as the breaker since there's a swing low around here. Some people will pick here as a breaker block, and you can see market reacted there. But for now, we're going to follow the whole step. Is there a mitigation block? No. Is there a rejection block? No. Is there a fair value gap? Yes, we have a fair value gap. We have the closest one closer to the other block around here. That's a fair value gap. Do we have liquidity void? This looks like a liquidity void in a way because of the impulse move of the candle. Is there an old low or old high? We have one below here and one below here. That's how we mark the chart. For me, this is how I mark my own top down analysis. Then I go to 1 week. On 1 week, I will still follow this whole step of the PD array. It's a guide that should always be with you every time you're analyzing the market. Don't forget, this is a fair value gap that we have to be conscious of. And these are fair value gaps in the higher time frame. If I had put in here, this would have signaled a good order block here because of what? A fair value gap order block. Market reacted there. We're not looking at that direction for now. Now on 1 week, using our premium and our discounts, on 1 week, what do we see here? There was what? There was a break of a swing low around here, signaling what? A breaker block here. What do we have next? We have what? We have an order block. You can see that, right? An order block. Just follow the whole step here. Is there a mitigation block? No. Is there a breaker? We have one mini breaker here. I can take this as a breaker because it had a swing low. This candle here, this one had an impulse move down, and this one, the body closed like above. You can see it here, right? Is there a fair value gap? I have to use my Fibonacci from the high to the low. Is there a fair value gap in the discount area because of the shift in market structure around here? No. Then what again am I looking for? I am looking for liquidity void. Is there a liquidity void? No. Is there an old low, old high? We have an old low here. These are old lows here. In case market do sell down, we're going to be targeting all those places that will take profits environment area. Then I'll come down to 1 day. On 1 day, I will still use my PD array until market does a shift in character. On 1 day, should I be aiming for all these lows around here? This one is from 1 week. On 1 day, what do I see? On 1 day, I'll come here. I know that I'm in a resistance area from 1 week, but market has not still done a shift in structure, so I can't take my sell there because 1 day is showing me a buy momentum. On 1 day, there's a break of structure here. Why? Because the longest candle, which is the swing low, you can see it. I don't know if I can zoom it bigger. You can see this candle here as a swing low, impulse move candle, and before it went up. This is our swing low, the longest candle, the longest wick that comes out. You can see it very well. Then I still have my rules here. Normally I put my line, just know that whether market broke out with the body. We all actually were encouraged to use the candle that broke out with the body to signal a break of structure. Now we start our analysis. There is what an order block here, because why? The last candle before the impulse move. I don't like order block at all, but it's an order block. Is there a mitigation block? No. Is there a breaker? No. Is there a rejection block? No. Fair value gap? No. Is there a liquidity void? No. Is that old low, old highs? We have old lows around here. We have old lows around here. These are old lows. Then we come down to 4 hours. On 4 hours, we're still going to be following those rules and regulation. This is what's going to guide you throughout your trading. It will make it more easier using the PD array. Is there a mitigation block? For now, no. Let's look at it very, very well. If you can see here, there was a mitigation block here, which market came out and hit, going up to the upside. And also there was also a breaker around here, which market used to go up. You know a breaker block, what a breaker block looks like, right? This is a breaker block. When there is an high here and market comes down to break the low, that is a breaker block. The last candle before the impulse move is marked as the breaker block. While a mitigation block, market does the same thing: higher high, higher low, higher high, but did not break the higher low, did not break the higher high, higher low, did not break the higher high. Do you see it here, right? But comes and shifts market structure. We expect the last candle before the impulse move to be taken as our mitigation block. And you can look inside here. I have to expand it very, very well. If you look inside here very, very, very well, we look for the swing points. We look for the swing points. As you can see now, market was about breaking structure. Market was about breaking structure here, but it came out with a wick. So it's not signaled as what? A break of structure. We also have a swing high here. We also have a swing high here, and we can see that market came in here but was unable to go down. We can mark this as our mitigation block. This is just on 4 hours. This is on 4-hour chart. We can mark this as our mitigation block. Also here is a mitigation block also, because market did not come out with a wick. It just came out but not with a wick, but needs to come out with a full body. Then you can refine it down again and refine using the same rule. Okay, I'm so sorry. On 4 hours, is there a mitigation block? We have one here. Is there a breaker? I'm not seeing any breaker block here. Is there an order block? Yes, it's an order block. The last candle before the impulse move. These are points for markets to react. That whole zone is from 1 day. There's a breaker for 4 hours. The rejection block, I can take this as a rejection block. This hold down here as a rejection block because the longest wick that came out there. The market rejection. Is there a fair value gap? No. We will all look for the type of fair value gap. We have different type. We draw Fibonacci from the high to the low. From the high to the low. If you look at it very, very well, market broke structure around here. If you can see it here, market shifted structure around here. But we look for the swing points. Is there a fair value gap around here? No. We keep asking ourselves those questions. Old lows and old highs. This is a form of liquidity. I marked that zone wrongly. That's a form of liquidity. But let's see. Market might take this area as an inducement. Market might take this whole zone as an inducement. Then what do we look for again? We come down and keep refining those areas. We keep refining those areas to 1 day. Now 1 day looks very bit sweeter for us. On 1 day, don't forget on 4 hours we are on the premium zone, right? But on 1 day now, you can see, if you look at this area now, there was a shift in market structure here. These are mitigation blocks. Shift in market structure here. Our swing high before it came down for the impulse move. But actually, there was also, if you look inside very well, there was also a swing point. I don't think I'll categorize as a swing point, but some people take it as a swing point here, and market reacted there. Do you see? It's a swing point. Then what happened? There was a break of structure here, making this an order block. Now you ask yourself the same question again. Is there a mitigation block around here? No. Is there a breaker? I can take this as a breaker, but let's see. There was a break of structure here, it mitigated here, went up. There was no breaker block here. Is there an order block which we just marked? Is there a rejection block? No. Is there a fair value gap? Yes, there's a fair value gap. There's a fair value gap around here. Is there a liquidity void? No. Is there an old low, old highs? I'll categorize this, if I was going to take it for a buy, here as my old highs. So using this whole scenario, you can use it on VIX 75, step index, anyhow you want to analyze your charts. You can use it to trade in very various ways to trade. You can start we're in the premium zone, and market reacted there and is going down. It's going down to our discount on 4 hours. If you can see, it's going down on a discount on 4 hours. You can refine it down to 15 minutes. And on 15 minutes, you're looking for a shift in market structure to find an entry to your analysis. Are you with me? So that's the way you do top down analysis. We follow this rule, the PD array. If you have watched some of my videos, you will know a mitigation block and you know a breaker. This is a breaker block which market mitigated here and went up. The same thing with the shift in market structure, a mitigation block, an order block, a rejection block, a fair value gap. The 4 types: normal fair value gap, implied fair value gap, inversion fair value gap, and balance price range. Balance price range is what I really learned recently, and it's a good way to analyze. This is a balance price range. I learned it from my coach. He really taught me very well. That's a balanced price. You has two fair value gap in a zone. Market always goes there to react in a very nice way. So don't forget to subscribe on my channel. Use this guide from your top down analysis, from the high to the low. You can use it from 4 hours. You can use it on one day. You can use it on 1 week. This whole zone entirely was a resistance zone, which we're expecting a pool of massive sell from this area. So I will take this sell only when market has shifted structure on one day. Until market shifts structure on one day, can I take this sell? But if you can see on 4 hours here, what do we have here on 4 hours? There was a break of structure here, and we had what? A liquidity void, which we marked here, signifying also our breaker block. So liquidity void and our breaker block, and you can use it to analyze your chart from total analysis downward, using your prem and your discounts and your chart to come out very well, and your analysis will be very nice. Don't forget to tap on subscription button and subscribe and ask your questions. Thank you.